Hello, trading is closed on January 29th, 2015. I'm Jeffrey Tennant. I didn't have a mejt prediction for today, but I do have one for tomorrow. I did say I thought that this 2032, make that 2030.52 target was a bridge too far, but it certainly isn't very far right now. There was an unfilled, or I should say failed, target from January 16th of 1993.60, and that provided support. In fact, it's amazing how the prices we've been saving since January 16th provided support and resistance today. Let's take a look at today's pattern. Sometimes these things with a black background is hard to read, so here's a white one. Early in the day, mejt said ultimately higher prices would print. Now when the signal was given right around here, here's the color-coded target. It's only around 2 points away and there's no clear exit. That doesn't mean don't buy. It means that you don't have a good risk-reward situation based on mejt alone. As prices drop during the day, the signal of FFF in red means that the down move is a false move, and by the time we hit the low of the day, we knew prices had to go 13 points higher to satisfy the ultimate buy signal. At this time, mejt can help us find a good entry point. Recall we had a price of 1993.60, and there should be some support under that price. So we can just plug in 1993.60, which is right here. So at this point here, you know you're at a mejt support level. You know there's a target price 8 handles away. It gives you a very favorable risk-reward situation to take a long trade. The dots in the computer program indicate the target has been hit, this dot does, and there's resistance over the target. Later in the day, there was a buy signal, it was a strong buy. The minimum price was here, but there's no law that says you have to stop at the minimum, and obviously that signal worked. The 2030.52 price did not print within its preferred time frame, but that doesn't mean it won't print. Well, let's look at some things that don't really involve the mejt system. Yesterday I said that this drop came at a very peculiar place in the formation. I had a number of signals I listed saying higher prices should print. When higher prices should print and we get a big drop instead, one of two things happened. One thing is you get a complete collapse, and that's the commonest thing. But the other is this whole decline is marked as a false move. This is a 5-minute chart. Here was the initial gap down, and here is the low. We had a new low yesterday, a new low, a new low, a new low, a new low, and at today's close we couldn't hold on to any of those lows. Unless we gap down tomorrow, all we have to do is to hold on to this. This is a rejection of these lows, and it signals higher prices. How much higher? Doesn't have to happen in a day. But this was the first move up after the FOMC announcement. That's leg 2 down of over 40 handles. Leg 3 up, as measured from this origin point, is usually larger than this, meaning we have a good chance to hit 2070 or higher, which is right where I have my blue line. Anthropomorphically speaking, it's as if SPX wanted to get rid of the failed mejt targets in this consolidation before proceeding higher. If you look at all the failed mejt targets from last year, these in February and April happened during a strong impulsive move. These 2 days in October happened during a strong impulsive move. And the one on New Year's Eve right here happened during a strong impulsive moves. You don't see failed mejt targets in consolidations, and we just got rid of the failed mejt targets here. It should clear us to move up. But in case anyone thinks things are going to be rosy from here on in, I don't think so. We have overlapping consolidation that usually is not sustainable. There tends to be one spike up, which can even hit a new high, and then it reverses. This is the percentage of stocks with favorable chart formations. And even with today's rally, it keeps going down, which means fewer and fewer hands are pushing us higher. So I do think this is a market high. Huge swings like this are very typically seen in market highs. But that doesn't mean we have to drop every day. And the call for tomorrow is that unless we gap down, in which case there is no call, unless we gap down, we have the makings of a pretty good rally, which won't necessarily complete in a day. And that is today's call.